The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me. Folks, I absolutely love being here with you, and it is marvelous Monday. Hopefully you're off to a fantastic start of your workday. If you're not, just change it in a heartbeat, folks. If we take a quick tour around the markets right now, you got the futures are up. The Dow futures up about 45 points or so. The ES Mini printing out at 12.95 and a quarter. They're up about 4 3/4 points. NASDAQ futures up 10. Russell 2000 up about 3.5. King dollar, though. King dollar up almost 10 ticks right now. Gold pulling back just slightly, trading out at $15.88, down $4. You've got silver off 46 cents out at $28.25. Our phone number is 877-927-6648. You got the light sweet crude is up 22 cents. And a quick tour around the world, you got the DAX trading up 33 points right now. The FTSE's up 27. Nikkei was up 22 points last night. The Hang Seng down 29 points. And the Shanghai up 4. So, folks, I first want to say thank you so much to Basil Chapman for sitting in for me on Friday while I was doing the online worldwide, and I do mean worldwide, folks, online Master Trader Series. We had 3 continents, 3 of the 7 continents, folks from 3 of the 7 continents. We've got 40 new masters out there that are trading that C to D leg. Folks that are absolute masters of the D point, of buying and selling the D point. And it was just simply, it was the only word that I can think of to describe it is magical. You know, it absolutely was a magical experience, and I do want to say thank you to each and everyone that did attend. We'll have the folks that did attend have the archive that'll be available on their members page. Should be available by tomorrow for the next 30 days. So it was really a great event, and I did miss being here, and I couldn't wait to get back in the saddle again. But, you know, I talk about, you know, the event was absolutely magical. Magical for one thing. You know, if you're looking for one magic word, I'd have to say that magic word would be discipline. And that's really what we spent so much time on Friday, really taking a look at a disciplined approach to being able to trade. You know, and if you think about it like this, folks, you know, how do you get a miracle going? How would you get a miracle in your life going? In my opinion, it's all about discipline. It's all about beginning with one step at a time. You know, and that step, folks, is just simply doing what it is that you can. And I know that all those folks that attended, they're certainly doing what they can. They took one step at a time. We had a kind of a cool slide that took a look at that, what that first step might be. And discipline, folks, what it does is it really enables you to capture your emotion, enables you to really capture your wisdom, maybe to transform your wisdom and your emotion into action, right? But not just action, right? Here at TFNN, we take massive action. You see, the moment, you know, we also talk about visualization, the importance of visualization. You know, today, you absolutely can have a fantastic day. What you've got to first start out and do is you've got to visualize it. Because, you see, the moment that you can, you know, feel your future, I mean, truly feel your future, that you can, you know, then when you can feel your future, folks, when you can see your future, when you can visualize your future, what you'll do is you'll pay any price to absolutely get there. And that's what it's all about. Visualize what it is that you want your future to be like right now. And all you have to do, folks, is one step at a time. What does your future look like today? That's what it is all about, folks. Think of it this way. Failure, okay? Failure is not a cataclysmic event. You know, it's not generally the result of just simply one major accident. I mean, think of, it's usually a long list of just simply accumulated items. You know, if your goal, let's just say your goal is you know, whether you're a salesperson, a business owner, you know, you're dealing with some type of major goal that you've got for a relationship. Maybe it's something, you know, that is in the market when you're trading. But let's just say you've got a goal, and your goal requires you to do 10 of something. Maybe it's make 10 calls. Maybe it's to find 10 A to B equals CD patterns that are in the marketplace. It's 10 of something. And if today all you did was just 5 of those things, if you only made 5 of the 10 calls you needed to make, if you only found 5 of the 10 charts that you needed to find, you might just say, it's not a big deal. You know, it's really not that big deal, folks. You know, that's maybe what you might be saying to yourself. But that, folks, is what I would say would be undisciplined. Because, you see, when you fall short, 5 short in one day, and then you repeat that for the next day, and that leads to a week, and then a month, and then a year, You know what it leads to, folks? It leads to a lifetime of absolute being undisciplined. And that is not the magic word. The magic word, folks, is discipline. Discipline is, and if you think about it like this, success, folks. Success is absolutely the exact opposite of what I just talked about. If you have to do 10 things and you find 15 charts, or you make 15 calls, or you do 15 of something when you're only supposed to do 10, and you start adding that up and that starts accumulating, to me, folks, that is absolutely what success is. It's all about that process. All about that process. So be disciplined, because that is your magic set of keys. So let's go talk about magic in the markets, and we'll start off here with the ES Mini, and we're taking a look at it trading out right now at $12.97. So trading out at $12.97. What it's doing here, folks, is it's just simply trying to make an A to B equals CD up pattern. Now we've got the 30-minute chart here. You had the market open down a little bit last night at between 6 and 6:30. Went ahead and moved all the way down to a low in that session. Actually, it's about 7 o'clock at night. Moved down to a low, 1287.25. From there, it started to move up. You created a nice bullish engulfing candle on the 30-minute chart. You went ahead and engulfed 3 trading sessions. You confirmed it on the following candle. And what you've got going right now is really nothing more than a couple of AB equals CD patterns on the way up. Of course, they're not going to get on the way up if King Dollar doesn't start to pull back here. But if we take a look at those A to B equals CD patterns out here, what we'll look at is the first one that's set up starts off with the low put in at 7 o'clock last night. The high that was put in at 10 o'clock, 10 p.m. when it got up to 12.99.25. Pulled back into the 3 a.m. time frame, pulled back to a low of 12.94.25. Now that retracement that it did, you can see here if you're taking a look at my chart on Tiger TV, and you can always watch us on Tiger TV, folks. Go to the homepage at tfnn.com, and as long as you're over there, go a little bit further over on the right-hand side. You'll see an area that's got some bordered with some bullets, and what you can do is you can just simply bookmark the Tiger TV button to your iPhone, your iPad, your Google device, and that's the best way. Just one click away is all that we are from you being able to view us. And if you folks, if you're listening to us on the radio, we absolutely appreciate you doing that. You can always catch an archive of this show on Channel 9. So right now you've got an A to B equals CD up, one that would take you into the 1306, more likely the 1309 area, where on the 30-minute chart it would make a move. You've got the second AB equals CD pattern that's set up. That one starting off at the same place, but going up to the high that was made at 4:30 this morning when it got up to, when I say it, talking about the S&P futures contract, when it got up to 1,300 even, Steven, pulled back during this session here between 9 and 9:30 so far, the low there being 1294.25. So what you've got is 2 candles coming in at 1294.25, acting as a little bit of support. That A to B equals C to D takes you to 1309.73. So I say the first target on the move up, should there be a move up here, is going to be 1309.51. That is on the S&P futures contract. But as I said, it's not going to go anywhere if you can't get the king to participate. And what do I mean by that? Well, if we go take a look at King Dollar on Friday completed an A to B equals CD. It actually did it on Thursday as well. But Friday's session was much, much more important. More important. Why do I say that? Well, when you take a look at Friday's candle, folks, what you created was a bearish engulfing candle. And that candle there, folks, if you take a look at Thursday's session, Thursday closed out at 81.65. And you take a look at the opening of Friday, you were at 81.65. Now, the open of Friday's session, the close of Friday's session was 81.65. The close of Thursday's session was 81.65. The open of Thursday's session was 81.52. Where did the King Dollar close out on Friday? Closed out at 81.42. It engulfed that prior session. Now today, King Dollar is saying, I don't care if you engulf me or not. It's not participating. It's not moving down, not backing down at all. 81.51. The King doesn't back down, folks. The market is going to continue its free fall. Now with the King needs to first do is complete the test of the swing point from January 13th when it gets up to 82.04, trading out right now at 81.51. Of course, just the move from 81.51 to 82.04, that'll more than wipe out the positive gains right now that you've got in the futures contract. if we take a look at what's behind the king, well, behind any king is going to be a queen, folks. And that queen happens to be the euro-US dollar. And you take a look at what we've got on my screen here right now. You've got the weekly chart. And that weekly chart is screaming at you that the euro wants lower price. And what you really want to understand when you're taking a look at what the strength or weakness in the U.S. dollar is, you've got to take a look at that basket of currencies. You've got to take a look at the euro, the pound, the yen. And if you just took a look at those three, you'd be great. You could take a look at the Canadian dollar, the Swedish krona, the Swiss franc, but really just take a look at the euro, yen, and pound. And what you're seeing here is the euro continuing to get pounded. And it is right now on the weekly chart, it is below a very key critical support area. That is the swing point going back to August 27, 2010. You're trading inside that right now. Looks like it's actually headed to 1.25861. Our phone number is 877-927-6648. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow futures up about 55. ES mini up about 5 1/4. Let's take a quick spin. Not a lot of earnings before the bell here, but out before the bell you had Campbell's Soup. Campbell's Soup is trading off about almost 2%. They closed out at 33.40 last trade. Just fired off at 32.78. Let's take a look and see what is behind their numbers here. If I could pull that over, I would be able to do that. Let me see here. Okay, so Campbell's Soup. Let's see, what do they have here? Their earnings per share, 55 cents versus 57 cents from the prior year. Where's the revenue numbers on here? They did 177 million versus 187 million, so they're down 10 million for the quarter. For their Q3. Guess people are not eating much in the way of Campbell's Soup. Must have been just a warm winter out there. So let's go take a look at them. CPB is the ticker symbol. See where it is that they're traded down to. Obviously, somebody knew something on Friday. Of course, they were just really hit just like everybody else. Most folks in the marketplace. So trading out right now at 32.78. And 32.78 just simply is taking you down into the swing point area. This thing has been in a pretty decent consolidation here for quite some time. The last breakout on Campbell's Soup was February 17th when it broke out to 32.82 was the low on that candle, gapped up. You did 6.2 million shares. You know, as you've been coming back into that area, you haven't seen any real sign of weakness out there. That is on Campbell's Soup. You've got... let's see here. You've got Krispy Kreme donuts. Let's go take a look at Krispy Kreme donuts, KKD. Apparently, people aren't drinking soup, aren't eating soup, but they sure are eating donuts out there. Krispy Kreme donuts here trading up about 3.6%. So let's see. What do they have to say for themselves? They have to say they're selling lots of sugar. Net income, $6 million. Well, net income, $6 million versus $9 million from the prior year. Their revenues here, let's see if we can find some revenues on their net income. Net income all over the place. Revenues, $108 million versus $104 million. So they're trading out right now at $6.23. Not really a big, huge deal. They closed out Friday at $6.01. Krispy Kreme, though, was trading down into that October 4th area. So kind of interesting. Now, October 4th, is a high-volume area inside ETFs out there. Not for Krispy Kreme, though, as it was coming down into that October 4th low, got to 578, but only on 1.3 million shares. Krispy Kreme gapped down on May the 8th with 4.8 million shares. This thing is making an A to B equals CD down, and that A to B equals CD down has been confirmed. And let me just draw it just a little bit more accurate for you. Looks like Krispy Kreme, even though it's trading up a little bit this morning, where Krispy Kreme wants to trade down to, it's probably a very dangerous spot where it's trading down to $5.46. More likely, Krispy Kreme would want to go down to about $4.89. Let's go put this on the weekly, see what Krispy Kreme has got out there at $4.89. At $4.89, it's going to get back, it's going to get below. It's going to take you right back here to this downdraft area, right into September 14th, 2007. Ouch, that's a stinger. I think Krispy Kreme at one time looked like they were a high flyer. It doesn't look like that to me on their chart. You had Lowe's out with earnings as well. They're trading down 6% right now, off a $1.80. 28.48 is what they closed at. 26.68 was the last trade here. Let's see, what do they have to say for themselves? Earning per share, $1.73 to $1.83. Let's see, sales increased 7.9% to $13.2 billion versus $12.2 billion. Their net income, net earnings, $527 million. That was a increase of 14%, but the guidance must not be that good out there. LOW is a ticker symbol on Lowe's. So let's go take a look at Lowe's, see what they are doing here this morning. Again, they closed out at $28.48 and just traded out at $26.70. So let's go see if we can sneak around and see what's at the $26.70 level. $26.70 is going to take you below that last breakout area from March the 7th. $26.70 is going to be right in about this area here. I don't see anything sticking out. Let's go take, oh, there we go. $25.04 looks like where Lowe's is probably headed to. That would be the high going back to December 2nd, 2010. Now, if we take a look at this, boy, it would be possible that, is it possible that this is setting up a fairly large ABCD down, folks? You would probably take a look at this. And that is not much of a retracement at all. I would take it down to $24.93. That would be on Lowe's. $24.93, I think, is going to take you right back to that high volume area bar that we were taking a look at, which happened to be, takes you back to May 16, 2011. 877-927-6648. When we get back, folks, we'll go see how these markets are going to pop and whether or not they're going to drop. King dollar up 8 ticks right now. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races, and it's I'll have another by a nose, followed by the Dow up 34 points, S&P's up 5, Composite up 9, small caps up 3, New York Stock Exchange up 30 ticks right now, NDX not 30 ticks, 30 points. You got the NDX up 8 points. So leading the charge out there, looks like we've got the small caps, Russell 2000. And, you know, folks, I was taking a look at Lowe's while we were on the break, and because it had been a relatively strong chart out there, just as Home Depot was. And what I did was I put up the monthly chart. Now, obviously, today is only May 21st, so we've got a little bit of time to go. Not much left in the month here, but Lowe's is giving an absolute huge bearish sign out there. Did not complete its A to B equals C to D, even though it was a confirmed A to B equals C to D on the monthly chart. The confirmation came in on March 2012 when it did volume of 352 million, as it was taken out as B point from April 30th that had 288 million. What it has created, folks, it has created an evening star, a three river evening star pattern, bullish engulfing to boot, and it's a huge bearish engulfing, and it's a huge bearish engulfing. It's taking out the month of April. It's taking out the month of March. It's taking out right now the month of February, and it's on its way. Right now, it actually has taken it out. Let's see, the open in January was 25.66. You're trading at 25.70. So pretty close to taking out 4 months worth of price. That is coming off the high. That is this month. That is on Lowe's, folks. That is not a good sign. You know, I spent a tremendous amount of time looking at all kinds of charts over the weekend. And although there are plenty of charts out there, and I can give you all types of reasons that a bounce should come in, that the market is at least a short-term support area, the more that I take a look at some of the stronger underlying, the stronger stocks out there. And what I mean by that, folks, is let's just, so we say, okay, well, maybe Lowe's, you know, is an anomaly. Maybe it's Home Depot that is the leader out there. So if we go take a look at Home Depot doing the exact same thing. Now, Home Depot did go ahead, and we're looking at the monthly chart. You know, the monthly chart is going to have less noise and is going to provide you with a better outlook on the future. And what the monthly chart did here on Home Depot, and I'm just drawing this on my chart here on TigerTV, and the B point came in for the month of April 30th, 2010. Now, on April, so what's interesting here is if you take a look, let me just refresh it to make sure. So if we took a look at Lowe's actually got above the B point, the B swing point, with volume and wide price spread. It did both. Home Depot didn't do that. Home Depot got above the swing point on the month of November 2011, did it with 231 million. That was going against the B point with 371. Makes a 1 to 1.272 A to B equals C to D. That should have completed at 51.52, closed out the month of April at actually 51.79. That's a beautiful thing. And what does it do right now? Right now, it has taken back the last 2 months. It's got a bearish engulfing out there. And since you didn't get over the B point with a wide price spread and conviction here, You had medium price spread, I'd say, but no conviction. You know, what Home Depot is at least doing is coming back into the area here of $44. It's at $46.42. I think it wants to get much lower, probably get all the way back to this B point, which would take Home Depot all the way back to a price of $37.03, trading out at $46.42 right now. Be careful, folks, if you're in that stock, because I can tell you the monthly chart is not suggesting that you stay in, because it completed an A to B equals C to D on the monthly, now making a bearish engulfing candle, not just engulfing last month, but by the time this is said and done, could be engulfing much, much more. And for the month, it is at its lows. Let's go take a look at the ETFs out there. Let's take a look at what we have going on. Let's see. So we've got the small caps. The IWM is the first one that popped up on my screen. The IWM making an A to B equals CD down. It completed the 1 to 1.272 on Friday. That price projection was 74.67. Where it actually got down to and closed was at 74.69. Now, if we take a look at the B point out here, so if we're going to try to find glimmers of hope, if you happen to be a bull, I'll give you some glimmer of hope. And if you happen to be a bear, I want to give you some signs that you've got to be careful about here. And that is the B point. We take a look at the small caps, which had been, the weak link out there. It's no longer the weak link. It is the Qs that are the weak link out here. If we take a look at the small caps, the April 10th B point, which has 101 million shares, has not been taken out with volume. However, what you've got is the small caps, the IWM trading below, October 27th, which is really the volume bellwether out there, meaning that it had 129 million shares, and you're trading inside that swing point. So it says the low area of that swing point is game. The low of October 27th happens to be 72.65, and that is where it is headed next. 72.41 happens to be the next stop on the 1 to 1.618 A to B equals CD down. That is on the small caps. If we just switch over, take a look at the market has only been open for about 10 minutes, but let's go take a look at the small caps, see what kind of volume we have this morning. And the small caps, I've got the looks like the 10-minute chart. Let's just switch that over to the 5-minute chart here real quickly. And so gaps down this morning, does it with 1.4 million, 1.7 million in the 9:35 to 9:40 session. And so it's got some fairly decent volume on the gap down this morning on the IWM. Let's go take a look at the spot. Let's go take a look at the Qs. And let's see what's going on as far as Apple is concerned today. So far, you've got Apple trading up $8. So we're going to take a look at Apple, and we're going to take a look at the Qs in a moment here. QQQ trading out at, as soon as I can find it, trading out at 61.15. So let's go see what's going on inside the Qs. And give me a moment here. So the Qs coming through the March 6th. First, you take a look at the March 6th swing point. Had 54 million shares. What do you do on Friday? You do 79 million shares. What do you do on Thursday? 62 million shares. What do you do on Wednesday? 52, almost 53 million. So it's taking out that swing point really with conviction on March the 6th. Also, the Q's making an A to B equals CD down. If we take a look at the A point, that's going to be your high on April 3rd, up at the 68.55 area. Our B point is going to be down on April the 24th. That's when it made a low of 64.45. Goes ahead and retraces up into May Day, May the 1st. And right now you can see you've got the Qs trading on the inside of that C to D leg, telling you that it has more work to do to the downside. And where that downside would be, folks, is the Qs would be headed out towards the October 27th high at a minimum. That is 58.03 out there. So trading out right now at 61.15. If we go and do the same thing, let's go take a look at the 5 minutes on the Qs, see what we have out here on the Qs. And you've got, it's a 10-minute chart. Let's put this to a 5-minute, see what kind of volume we're looking at. So gaps down this morning with 1.2 million shares, trades just slightly higher in that next session with 1.9 million shares right now. And this session is just about to end. Well, wow, you've got volume right now. You've got 3 minutes to go, and you've already done 1.5 million shares inside the Qs. And folks, stay tuned today, because following this show, you've got the Money Masters show with Tom and myself. Then we go up to Newton, Mass. to Basil Chapman. Then out to Tucson, Arizona. Larry Pesavento back here for the David White Band, the warm-up band for the Tom O'Brien Show. Let's go take a look at, let's see here, what's popping and what's dropping. So you got Cooper Industries, CBE. Let's go see. They must be being bought out by somebody. To receive 30, yep, they sure are, to receive $39 in cash and some small amount of shares. They're trading up 25% right now, out at $13.92. We're taking a look at Apple as the next leader out there, trading up $8. Google right behind them, up $6. MasterCard up $4. Continental Resources, CLR, they're trading up 4% right now, 4.3%. You've got Ralph Lauren Polo. Let's go take a look at what Ralph Lauren is doing out there. I haven't looked at that chart in forever. RL is the ticker symbol on that. That is trading up about 1%. Not really any big shakes out there. Just wanted to look at the chart. $143 is what Ralph Lauren is trading at. Now, Ralph Lauren had gapped up nicely on February 7th, closed out on February 7th at 157, and it got to a high the following session on February 8th of 178. Did that with 5.7 million shares, and it has come back well beyond that breakout area. And you know what's kind of interesting, folks, if you take a look at Ralph Lauren, take a look at May the 8th, put in one heck of a nice hammer candle. I mean, that is one heck of a hammer candle, but the trading session after that, can't see prices on the chart. I'm not sure what's going on there, but Al can take a look at that. And we take a look at Ralph Lauren, folks. The hammer candle that it put in on May the 8th was one beauty. I mean, that is one beauty of a hammer candle. But the following trading session, it closed lower. It told you that lower prices were coming. It was shouting at you. And if you were in there and you had bought into that gap up, if you were trying to buy that as a momentum play, you may not see that high anytime soon, because it made a high with 730,000 shares on March the 14th, and when it gapped down and made that hammer candle, did it with 2.7 million shares, and you're trading well below that breakout area. Let's go put this on a weekly chart out here, see what Ralph Lauren is, in fact, doing. Ralph Lauren is headed right now towards a couple of swing points, high volume bars, I would say, which is really August 12, 2011, where it did 18 million shares. Last week in total, it did 16 million shares. So Ralph Lauren is coming a barreling down. You got CF Holdings. They're trading to the upside. They're popping up about 1.4%. Let's go take a look at what is dropping. What's dropping is you've got LinkedIn. So there has been that chart, I think, has been all around the place from its original IPO, LNKD. Let's see here. So LNKD trading out at 9. Whoops, I lost that. Let's see here. I think they're trying to fix the den there. Folks, sorry about it if the prices aren't showing up. Let me put that chart back up here as well. LNKD. And they're trading out right now at 93.50. So let's go take a look at this. Oh, you know what we should do? We should put up the Facebook chart. Just see what the heck Facebook is doing. It's actually one of the leaders to the downside. You got to love it, don't you, folks? Absolutely got to love it. So what we have here is you've got LinkedIn trading out right now at 93.45. You had some volume come out of it on Friday, and where that's headed to right now is where LinkedIn gapped up. It did that with 13 million shares on February 2nd. The high there, 91.20, the low of 82.06. And LinkedIn almost made an island reversal candle. I noticed this yesterday or on Saturday, and it slightly missed a island reversal candle. Yeah, thank goodness for those of you folks that are actually in this stock here, because that would have been a death warrant. Now, what LinkedIn is doing, it's making at least a fairly major, let's see, let's take a look at the ABCD down. That would go from the high on May 14th when it was out at 120.63. The low came in May the 8th, down at 101.53, makes a little bit of retracement, and LinkedIn headed down at least to where it broke out, which would be a 1 to 2, A to B equals C to D. So look for LinkedIn to get down into the 74.32 area, and just don't like the volume from Friday. And today, quite frankly, it's not doing a whole lot better. You've been trading for 17 minutes. You've done 1.3 million shares. They did 12 million shares on Friday, and so it's got volume coming out of that balloon as well. Let's go see Facebook, FB, and charts here, FB. Of course, I'm going to have to put this on an intraday basis, but of course on the daily chart here, it gapped down. So folks, Facebook is probably headed to about $15, which is probably where it should have been priced at to begin with. Let's go take a look at the time frame out here. And so volume-wise, there's no way to really read this chart here, folks, but don't be in Facebook. Let this thing, if you are in Facebook, get out of Facebook. Put your money to work in better spots than FB, Facebook. You got Imperva, IMPV. They're trading off 11%. So let's go take a look at that chart, see what they are doing out here. IMPV. There we go. They are trading down at 2607. Right now, 26. Okay, so this is a new IPO. So IPOs, folks, are that's trading right to the IPO date of November 9th. The high out there was 25.12. You've already traded down to 25.12. That had 3.3 million shares in this. What do they do? I'll go check it out. IMPV. I'm not even sure what it is that they do, but we're going to find out. IMPV. Let's see, Imperva. What is their profile? Subsidiary engaged in development, marketing, sales, service, and support of security solutions. That's what they do, folks. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
for me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes
as they teach you the art of mastering money
when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Dow up 18 points now. S&P's up 2. Composite slipped into the red. Small cap slipping into the red as well. Microsoft down 6 ticks right now. And let's go take a look at gold. You got gold trading out at $15.87. That's off $4 after having a couple of nice sessions out there. Now, if you are watching us on Tiger TV, you're going to see the tail here of a battle, an epic battle that's going on in the world of gold. What do I mean by that, folks? Well, if you take a look at the lows that were put in gold here, you're going to take a look at 3 of them. You're going to look at the first one that was put in on September the 26th when gold got to $15.35 even. Contract-wise, it was a doozy of a day. Did about 359,000 contracts to the downside. Then gold makes an A to B equals CD pattern. If we go take a look at it here, we'll start with the swing point low. Come up to gold right up here in October 17, 2011. Pulls back into the swing point just for a couple days down to October 20th. The 1 to 1.272 says 1810. What does gold get up to? Gets up to 1804.40. Then it makes an A to B equals CD down. A, B, CDs, folks, they are out there all over the place. You want to understand how to trade those. It makes a 1 to 1.618. A to B equals CD down, taking it to 1544. Actually got down to a low of 1523.90. That 1523.90 was testing out that swing point from September 26th. That swing point again at 359,000 contracts. Going into it on December the 29th, only 114,000 contracts. Couldn't bust it down. What's it try to do? Bust it up. Makes 100%. Move will move. Makes another AB equals CD pattern out there. Can't bust it up. What's it do? Tries to bust it down again. When is it busting it down? Did it on last Wednesday. Last Wednesday gets down to a price point of 1526.70. 159,000 contracts. So you have 159. Going against the most recent swing point out there, 114. Going against the swing point from September 26, 359,000 contracts. Not enough to hammer it down. And then, folks, what you also had happening here, and this is a real key, on May the 15th. So last week, I believe that was on Monday or Tuesday, you had the hammer of hammers. Well, it's called the death cross. And that death cross is with the 50-day on the daily chart. When the 50-day moving average crosses over the 200-day moving average on the daily chart, folks, and that was a signal that gold gave you. We know that gold broke through a long-term trend line going back, and it was a beauty on the weekly chart out here. I'll put that up on the screen. It was an absolute beauty because it was a long-term trend line going all the way back here to October 24th, 2008. Look at that trend line. Gold was dancing with the stars out there on that trend line, and it busted through it the week of May the 11th. Now, last week, and here's key. This is a key, folks, if you are long gold, and you're going to want to absolutely pay attention to it. It's why you want to make sure that when you're looking at charts, you're not just focused on the daily, if that's what you're trading. You got to go up to the weekly. You got to go up to the monthly because it's going to release additional information to you. What's that additional information? Well, when I said it was trying to hammer out a low, I'm not kidding, hammer out a low, because you made a hammer candle last week. You made a beautiful hammer candle, so we know on the daily chart you're making a triple bottom, and you were testing it with some lighter volume going back into that September swing point. Right now on the weekly chart, you make a hammer candle. Of course, you get a close below 1591.80. You're trading out right now at 1586.60. It's telling you that there's absolutely, it's not, the work to the downside's not done. I don't care whether it's a triple bottom or not. It's going to go try to chisel out and hammer out that area, and it's going to hammer it out, folks. And it's going to take gold all the way back to $1,100 and change. Thanks for being here, folks. Stay tuned. Tom and I will be up next. Then we go up to Basil Chapman. Always so great to be here with you. Have a marvelous Monday, folks. And be disciplined, not just today, but every day the rest of your life. Take care, folks.